The battle against soaring prices seems to be gaining ground as consumer price inflation drops to just 3% compared to the record levels of the past year. This significant decline offers a glimmer of hope and relief for consumers and policymakers alike. However, does this signal the end of the struggle against inflation, or is it just a temporary respite? As we explore the latest data and its implications, one question arises: how will this evolving economic landscape impact our lives? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. In a surprising turn of events, consumer price inflation has dropped to a mere 3%, significantly lower than the levels experienced in the previous year. This respite from high inflation comes as a relief to consumers who have grappled with rising prices for an extended period. Notably, June's data surpassed expectations, with key indicators of underlying inflation falling below forecasts. While it may not mark the definitive end of the fight against inflation, there is a growing likelihood that the upcoming interest rate increase scheduled for July 26 could be the last for a considerable time. The market responded favorably to this data, as short-term Treasury yields plummeted, stocks rallied, and the dollar headed towards its lowest point in over a year. Investors began speculating that the Federal Reserve might ease up on its monetary tightening measures. Ryan Sweet, chief U.S. economist at Oxford Economics, suggested that the new data could prompt the Fed to question the necessity of further rate hikes beyond July, implying that the current tightening cycle may be nearing its conclusion. However, it is crucial to acknowledge that despite the significant drop, inflation remains well above the Federal Reserve's 2% target. Reducing it further may prove to be a challenging task, particularly during the final phase. The American population continues to endure higher prices for various goods and services than they did before the pandemic, and these elevated costs are expected to persist. This predicament poses a potential vulnerability for President Joe Biden, as his Republican opponents could exploit high prices as a weapon against his administration in the upcoming re-election battle. Although the recent data indicates a positive trajectory, caution is necessary. The decrease in inflation may be partially influenced by base effects, a phenomenon that occurs when comparing the current consumer price index to the same period the previous year. In June 2022, energy prices surged due to Russia's invasion of Ukraine, which made the subsequent slowdown in price growth appear more dramatic. Consequently, as the comparisons become less favorable in the coming months, annual price growth could experience a slight uptick. One must recognize that a single consumer price index report, even if it surpasses expectations, may not sway the opinion of Federal Reserve officials significantly. Richmond Fed President Thomas Barkin emphasized the central bank's commitment to restoring price stability, highlighting that inflation remains too high. Barkin warned against prematurely scaling back on measures to combat inflation, as doing so could lead to a resurgence of inflation, which would necessitate even more drastic action from the Fed. A crucial factor contributing to elevated inflation and fueling the overall economy is the robust labor market. Job creation continues at a strong pace, and wage growth remains solid, empowering Americans to maintain their spending habits. While housing costs played a significant role in the overall increase in prices in June, airline fares and used car prices experienced the decline. Grocery prices, which have been a source of financial strain for many American families, remained unchanged compared to the previous month. Additionally, a closely monitored services price index, which excludes energy and housing, remained relatively stable in June, showing only a marginal change from the previous month. However, when compared to the previous year, the increase was the smallest since late 2021. Considering all these factors, Jennifer Lee, a senior economist at BMO Capital Markets, suggests that this data provides the Federal Reserve with some breathing room. If future inflation reports confirm a similar trend between now and September, It could justify the Fed's decision to maintain its current position. Nevertheless, the question remains, how will these evolving economic conditions impact our lives? We invite you to share your opinion on this matter and reflect on the potential consequences of this delicate economic balance. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.